This week, the housing market marked another week of slightly improved home sales compared to last year. Sales are not strong, really, anywhere, of course, but they are consistently coming in ahead of last year's pace. 13 of the last 15 weeks recorded more newly pending sales than the same week a year ago. You've heard me discuss this change in the market recently. We now have the second month of corroboration from NAR, which released its August existing home sales report last week and reported a seasonally adjusted annual rate of 3% more sales in August 25 than August 24. Home sales are running a little better than last year. In the real-time data, we count the newly pending contracts each week. These are the homes that are on the market, accept an offer, and then go into the contract pending stage of the sales process. Homes typically take 30 to 45 days to close transactions, so the newly pending deals we track now are sales that will complete in October and November. This weekly pending sale data is the leading indicator for future transactions. The NAR existing home sales headlines are lagging and backward-looking data. And in fact, the lagging data headlines are starting to catch up with the real-time numbers, which we've been logging small gains for a couple of months. Home sales are running a little ahead of last year at this time. This includes Texas and Florida, the two biggest real estate markets, which both are showing slight growth in sales compared to last year at the statewide level in both states. So what should we attribute this growth to? I can think of a few potential reasons. There are more homes on the market, and early in the year, we had more sellers coming to market each week, more new listings. So more sellers means more sales can happen. Now, to be clear, there are 18% more homes on the market and only 2 or 3% more sales happening. But that supply helps. So in places like the Midwest and Northeast, like Connecticut, for example, inventory is still very low. And it is very difficult for sales to grow when there aren't enough homes to buy. But in general, across the country, more inventory and more new listings enables more sales to happen. A second reason is probably related to the slowly easing mortgage rates. The 30-year fixed rate mortgage was at its 2025 peak all the way back in January. That slowed the sales rate through May. But now the opposite is happening. So we also see what I'd call more realistic pricing from sellers. Potential home sellers know that the time to sell a home is growing, the time it takes to sell a home. Price reductions are still quite high, and in many markets, we're seeing year-over-year price declines for sales. Some sellers have been waiting now for 3 years, hoping that conditions would improve. So the longer we go with mortgage rates in the sixes, the more sellers are going to accept lower prices. So I described last week the downside stickiness phenomenon in home pricing. So prices are slowly adjusting down, but it's happening. And some of those price adjustments have home buyers finding deals. So we'll look more at home sales today and also the latest pricing data and the latest supply and demand metrics. I'm Mike Simonsen. I'm the chief economist at Compass. In these videos, I look at the U.S. housing market data every week. Our goal is to help everyone understand exactly what's happening in the market right now so they can make the best decisions when buying or selling a home. In these videos, I use data from Altos Research and data from what we see here at Compass, the largest real estate brokerage in the country by sales volume. If you like these videos and our weekly housing market data, please add yourself to our new Compass Intelligence mailing list. There's a link in the description below to join us. Click that link to add your name to the list. We send the Compass Intelligence email every Monday with the data, the slides, and the video. This is a new list we're building from scratch at Compass, but we already have thousands of people who've joined, so you should join us too. Link below in the description. All right, it's the end of September 2025. Let's look at the latest housing data for the country. Let's start this week with a look at the weekly pending home sales data that I've been referring to. In our count, the new contracts increased by about 1% for the week and actually came in nearly 5% greater than a year ago. Newly pending single-family homes ticked up to 65,000 this week. There were another 13,000 condo sales started. In this chart, we have the single-family home sales, the weekly pending data. The blue line from 2025 continues to print more than 2024. 65,000 this week versus a little less than 63,000 a year ago. More is more, so we will call that optimistic. I have two observations about home sales. As I mentioned, the NAR home sales numbers for August were released last week. In their count, home sales were about 3% higher than August a year ago. This 3% growth is right in line with what our weekly pending counts have been saying for several months, so the NAR data should not be a surprise. Their seasonally adjusted annual rate has been just over 4 million transactions, when last year it was around 3.9 million. So not a lot, but it is up. As of now, the weekly data indicates that September existing home sales, when reported by NAR next month, should also show growth over last year. Then it gets interesting for Q4. So last year, mortgage rates moved down to 6.1% in September. That moved the needle on sales in October and into Q4. Mortgage rates now are sitting at 6.3%. I'm not really convinced that's low enough to really help. In 2024, housing demand got a little boost late in the year. Will this year be able to keep up? We'll see. So here's the other thing that's interesting in the weekly pending sales data. We've noticed that condo sales are rebounding over last year faster than single-family homes. I'm not sure why that is, but we counted 8% more condo contracts started this week than the same week in 2024, and 4% more single-family homes. So like I said, I'm not sure why that is, but it seems notable. Also notable is that about 20% of all condo sales in the country happen in Florida. So that's something to keep watching. The median price of those newly pending contracts was $399,000 this week. That's a little uptick for the week, for the second week in a row. The recent average also ticked up to $397,000. So prices are showing surprising resilience to me. I keep expecting prices to tick a bit lower, but by this measure, they're not yet. In the chart here, you can see this year's blue line is staying slightly elevated over last year's purple. Home prices are still 2% above last year for the newly contracted sales around the country, about 2% gains. So I've reported in these videos recently that price per square foot is a useful normalized gauge of prices. And more in line, it's behaving more in line with my intuition about home prices. Like the asking dollars per square foot is reporting 28 basis points lower now than in 2024. So when looking at price per square foot, by that measure, home prices are indeed lower now than last year nationally. I continue to see that as a leading indicator for sales prices later in the future. So while the weekly contract prices are still 2% higher than last year, it is important to note that some home price indicators are negative, even though many are still holding on to the year-over-year gains. You can see those gains in this chart. The blue line for 2025 keeps printing a few gains. The purple line from last year was just about to have late year gains with those mortgage rate dips at the time. You can see that in October. The yellow line from 2022 shows the opposite conditions were underway. Prices were dropping as mortgage rates in the sevens really stomped on the brakes. We could measure those weekly price drops very easily, even though in many markets, home prices now are priced below 2024. The overall trend does not have a big price adjustment like we saw in 22. If mortgage rates were to jump back to 7%, I expect that we would see that kind of price correction quickly. The new listings rate eased down a bit this week, as you'd expect here at the end of summer. We did count about 3% more sellers than the same week last year, however. So there were 65,000 new listings for single-family homes this week compared to 63,000 last year. In this chart, I'm using the 90-day rolling average to smooth out the weekly noise, and you can see the trends very clearly. Notice how this year's blue line is sloping down fast. There are fewer sellers each week. This is one way to see that inventory is probably not growing anymore this year. There's simply fewer sellers now. However, if market conditions improve For example, if mortgage rates dip closer to 6%, we could see a few more sellers this autumn. So there's opportunity for those potential sellers who are sitting on the sidelines. In fact, you can see a little bump in the supply last year when rates dipped. That's the purple line in October last year did a little jump. So what happened is that most sellers are also buyers. So when the buying conditions improved, we saw a few more listings in October last year. This year, the seller pace peaked in early and has been trending down really since May. The 2022 peak and steep drop off in the yellow line was very insightful about the rest of 22 and into the 23 market. So in June of 22, it looked like inventory would skyrocket, but by July and August, it was clear that sellers were pulling away. If I'd been more insightful at the time, I would have recognized how that yellow listings line in 22 was telling us that transaction volume would crater. With fewer sellers, there are fewer sales. I mentioned earlier that our sales volumes are up a bit now, partly because the seller volume was up. The new listings volume was up earlier in the year. You can see that part of the blue line back in April and May and June here. The important takeaway from the new listings data is that the pace from the early year, from early 2025, is kind of gone. It looks like dissatisfied potential sellers are staying away from the market for now. Rounding out the supply picture, there are 863,000 single-family homes unsold on the market now across the country. That number has basically been unchanged for 2 months. In fact, this week's count came in fractionally fewer than a week ago. There are basically no markets in the country where inventory is climbing quickly anymore. If you have a bearish hypothesis on home prices because you think supply is ratcheting up each week, you should examine your case. Inventory is not climbing. In this chart of unsold inventory, single-family homes on the market, you can see the blue line is basically horizontal this summer. Last year's purple line shows inventory climbing well into October 2024. The unsold supply of homes on the market is 18% greater than a year ago. In May, though, there were 30% more homes on the market than the prior year. So that annual growth is compressing quickly because inventory was still piling up in Q3 and Q4 last year. It is not piling up now. I already shared how the new listings pace has slowed. In recent videos, I've also covered how withdrawals are quite high too. I'll report September withdrawals next week, so stay tuned for that. As inventory has been stable and new listings are declining and sales are inching higher, the result is that price reductions have actually been stable too. This week we counted 41.6% of the homes on the market with price reductions from the original list price. That's up just 10 basis points for the week and still below the apex in early August. I see the stability in price cuts as an indication of moderation of future negative price pressure. The headline, home sales prices, will likely to continue to report lower. Some of those headlines I will expect to report year-over-year home price decline soon, like I've mentioned in the price per square foot data. That's quite unusual. So moderation in this sense means that we don't see in the data home price declines accelerating, for example, for the country as a whole. Buyers are in control, but sellers have enough economic strength that they don't have to fire sale. So in this chart, notice that this year's blue line is about to pass under the yellow line from 2022. In 2022, in the fall, mortgage rates jumped all the way to 7.5%. Many sellers were taken by surprise at how quickly the market changed. Price reductions in 22 peaked in November at 43%, higher than this year. Many markets at the time, places like Phoenix and Austin, had 60% of the homes on the market with price cuts. The headlines reported year-over-year home price declines 4 to 6 months later in the spring of 2023. The price cuts data leads the sales data by several months. So locally right now, Denver, Tampa, Austin have 55% of the active market with price cuts. Those markets definitely have price pressure, it's still forthcoming. There is definitely data to keep watching in the price cuts data lines. That's all the data we have for time for today, though. If you want to make sure you don't miss any of the weekly data and video commentary, you should sign up for our email list. There's a link in the description below to add your name to that list. Thanks, everybody. More next week.